broke 70k last night, but I also still don't have a voice. So welcome to your Bitcoin ASMR update. Let's get into it. Joking. I'm going to try really hard to speak normally, but you have to forgive me because my voice is still really bad. But I'm still here because we broke our target. So let's go. All right, guys, my voice is seriously straining, but Bitcoin did break 70k and we need to talk about it. This is a follow-up video from my update yesterday where I talked about the potential of Bitcoin getting to about 70k. And throughout my sleep in the Asia session, we ended up smashing through that and we made it to about 71,600. Let's get into the details of what actually happened with this price action. And then that's going to help us to gain some sort of an idea as to what might happen next. Now, I actually want to bring you to a tweet that I retweeted today from Credible Crypto, who seems to be copying it a lot because he's quite bearish. But he said a lot in his tweet yesterday that I actually agree with. And that's what I want to talk to you about on this video. So he said, we tagged 70k, but the move up again was completely perp driven with spot selling off. More of the same we've been seeing at prior all-time highs. So at the moment, it just looks like another fake out to me. Now, I retweeted this because I agree with that part. As usual, there's always the misinterpretation that build a different story into anything I've actually said. And so people think that I'm agreeing with his target of 58k or whatnot. No, I was very clear with what part I actually agreed with in his tweet, and that is that spot was selling last night and that the rise was actually perp driven. And so let me explain what this actually means and why you draw the conclusion as a pro trader that if spot is selling and price is rising, then the price is rising as a result of perpetual contracts, leverage trades, which does often lead to a fake out. And here's where we gathered that evidence. So what you're looking at here is the Bitcoin price at the top. Then we've got the CVD for the stablecoin margin contracts. We've got the CVD for spot, and then we've got the CVD for the coin margin contracts. So the contracts that settle in Bitcoin as opposed to USDT. And down the bottom, we had open interest. Now, what made me draw the same conclusion that that tweet was talking about was we had open interest rising last night. We had the price rising, but we actually had spot declining. So see, this CVD was actually dropping. Now, if spot CVD is dropping, that means that people aren't buying spot. And I've spoken to you before about when we have a bullish move to the upside, if the CVD spot is bullish, that's confluence because that's telling us people are happy to invest in this because generally you buy spot for investment purposes, not for short-term trading, which is what perpetual is used for. So what I could see yesterday that was making me suspicious, particularly right here in this section here, was the spot was declining, but the coin contracts were actually rising, and so was the open interest. So that meant that the move up was driven by leverage trades, which are generally more short term than spot buying. And that does lead you to believe, in combination with everything else that I teach you on this channel about counting your rises and drops, when you see this combination and you know that your count on the daily time frame is entering the level 3 or it is in the level 3, then what is actually happening now is the market maker is starting to build contracts against us. That is one possibility. And that means that if the price is rising, the contracts they're building against us would have to be short positions. The other thing that I don't love about this rise, although I have to be honest, because when I say these warnings to you guys, the only reason I say them is to make sure that you guys are protecting your profits along the way. I'm not trying to get you to believe it's not real or to not take a trade at all. Whilst the trend is there, trade the trend, and the trend is currently bullish. 100% make your money from that. When I give you these warnings, my only intention in giving them to you is to make sure that you protect the profits that you've made, because if this swiftly turns around, if it turns out that all of these things that we're seeing come to fruition and price swiftly turns around, then all the good work that you've done in opening your long position that might be in profit right now could get taken back literally in one candle. So the only reason I give you these warnings is so that you keep taking partial profits along the way and you keep moving your stop loss up so that you can't end up getting liquidated. So I just want to be clear about that. And even when I say epic dumps could follow, that doesn't mean 58k, that doesn't mean 47k, it doesn't mean big drops like that. Know that I'm a day trader and they could just be a midweek reversal. You know, it could be a tiny pullback and that we're still in a bull market, you know? So I have to be clear about that because I've seen a few misinterpretations online over the last week. So So let me now tell you my concern. Whilst we're riding this trend to the upside and we're happy about it, look at this. We have still not had a spike in volume down here. No spike in volume, right? We don't have any vectors here yet. And what this means is that the market maker is filling contracts at the lowest amount they can possible. And the goal here is to get late longs to enter the market before there is any type of reversal. Did they enter the market? Now let's talk about that. So I spoke to you about this spot declining here, right? And futures was rising, and also stablecoin futures was rising as well. Look what happened here when we broke 69K eventually, right? So we had a bit of a tap here, and then on this one, when it eventually broke, now look at the confluence. The open interest is rising massively. We've got coin futures, stablecoin futures, and also spot all rising now. So that means confluence in the trend currently, which is great. But when you combine that with the count, this could all be rising because it's now late longs getting in, which you expect that. Especially after breaking 70K, you expect that. Late longs are going to jump in because at 70K, they think, oh, the breakout is coming, like this is it, you know? And it might be. I'm not saying that it's not. I don't know how long they will continue building their contracts against us. But what I can tell you is that that is what is happening based on everything that I've just seen. And when we go and have a look at Hyblock, I spoke to you about this in yesterday's video. We still don't have high levels of liquidity below price. The liquidity is still above price. That means that people are more interested in shorting this. They're trying to catch the top, or what they think is the top, you know, being the top of the accumulation range in a short position, because they still don't necessarily believe this pump, you know? Let me actually refresh this now. So we can see here that this was the yellow we talked about yesterday, about 69.9. That got completely wiped out. I think it was in Asia today, potentially. We've taken out some of the green that was above. I mentioned that there was some liquidity above that as well. That got taken, and we're still building. See how it's still more green here, but below it's purple. And the purple, look at the bar down here, it's not, that shows not many long positions opening. So right now we're in a situation where people are more interested in shorting the top of the range because they don't believe we're going to break out than opening long positions and riding the trend. And I don't understand that. The trend is your friend. You ride the trend until the end, you know? And the fact that we're just not getting it down here, again, goes to show that this is definitely a setup, but it could be a setup to 75K. Like, I don't know. To me, it's more about the timing than anything else. You know, you guys know that I do expect people to start taking profits before the election. Again, someone was like, you keep saying that, but when? When? Before the election? Like, what other language do I need to say it in? That could be any time between now until the election. We are looking for weakness in that period every day. We are looking for weakness. If we don't see it, fine, continue to ride the trend. If we start to see it, only then will we start to take our own profit, number one, and number two, start to potentially flip our positions, providing the right signals are there. So believe me when I tell you I'm bullish, but I can be bullish and see a trap. That's the difference, because I manage my trades well. And so because I can manage my trades well, I can trade a trap easily. Sure, I can see what you're doing, market maker. I'll be in on that with you. No worries. And that's what we're all doing right now. We should all be in long positions, riding the trap with the market maker and looking at lower time frames for weakness, so that we can get out before they execute that trap. So where might the trap happen? Let's go and have a look at this. Now, I'm showing you right now heat map orders on Trading Light, and heat map orders show you where current limit orders are, in case you've never seen this before. And they would be limit orders below price are long positions, limit orders above price are short positions. They can only be that. Now, I'm actually showing you not the normal chart that I show you usually on this channel. I'm showing you the Binance Coin M contracts, because the Binance USDT ones aren't giving me much, right? And again, let me tie this back to this to show you how you build your case. You know, I did that video on Sunday about how I'm the biggest conspiracy theorist. Even with my trading, I'm the biggest conspiracy theorist. So what's my conspiracy here? Look, my conspiracy is that the CVD is massively rising on coin margin contracts. Therefore, I care about coin margin limit orders. I don't care about the USDT ones, which here aren't giving me much. So when I switch to the coin margin ones, now look, see, these red and white zones are the areas of interest to me. And this tells me just at a glance And I'll explain to you why. But this at a glance tells me they still want to push this higher. It's not done yet. And I'll tell you why. Below price, so this candle right here is the current 4-hour candle. Below price, the red zones or here are high level orders. Look, you can see 185K, 111K, 94K, right? That's between 70,500 to 70,650. So if we get a little bit of a retracement into these buy orders, that will pick up and then it will continue to move to the upside. When I see those buy orders so close to the current price, that is a signal to me that they want price to keep going. If we were going to get a decent retracement, you would see the red zones down here somewhere, wherever that retracement is going to come. We're not going to get it yet based on this. Unless, of course, they disappear, because that's also possible because they're just limit orders. So therefore, now you know that. You know where they want to currently hold price, but this is something that you have to watch live in the moment. So as price comes down here, you would check that those orders remain. And that is why it's handy to have something like Trading Light. But then when we have a look at above price and the same principle, where are they looking? Where is the highest interest to short this? And so above price here, we've got shorts at around, what is this? 72,050 up to 72,175. So let's just say just above 72K, they're looking to short, but also at 73,300. Now, if price does continue moving up into this zone, again, it could be a trap. And as price gets closer, those orders might get filled and we keep going. And that is what I suspect would have happened yesterday. I can't confirm it because it happened in my sleep. But I know now, through having traded this method for so many years, that when I wake up and we have smashed right through what I saw a high level of orders, that either those orders got pulled at that time or they just got smashed right through and the buys were stronger. And that could be what completes this level 3 rise. But again, we could get to it and then more orders could build above and also more long orders could build below, trying to push it even further. That's why I say we have to watch this live, and all I can do is give you the targets based on what I'm looking at the time that I film this video. But when anything dramatically changes, I will usually try to do an update on Twitter, worst case scenario, but your best case scenario is to just get yourself into our Discord. And the best way for you to get yourself into our free Discord is to use the link in the description of this video to join Blowfin. If you do that before November 13th, you can earn up to $10,000 worth of futures bonuses. In addition to that, as I mentioned, gets you access to our free Discord, and it also gets you a 20% trading fee rebate for life. Only with the link in the description of this video. Now, when we have a look at the lower time frames to see if this has got any more juice left in it, what we're seeing right now, again, is the rising open interest, okay? But we've got a flat volume currently, and we've got consolidation currently as well. So when you have flat volume and consolidation, but you have rising open interest, another breakout is coming eventually. Now, that doesn't tell you the direction, it just tells you breakout coming. And there isn't a stop hunt actually necessary in order for it to come, because their open interest shows you that there is commitment. And these levels here that I've put all over my chart that just look like a massive mess right now, but all of these lines are the liquidity that is available above and below price currently. And you can see that that can take us all the way to the range top. But I do have to point out that these levels aren't huge. See here, what I've marked here is the amount of liquidity that will get taken if price spikes into each of these lines here. And when they're around 67, that's actually not all that high. So I usually get rid of anything that is under 100 just to keep it looking a little bit cleaner. And we can see above price currently, the highest levels we have is the 90 million here at about 72K, and then another 90 at about 73,500. So they're very close to those heat map orders that I told you. And if price does continue up, probably going to take that out in addition to all of the other 60s that I showed you, which we won't add them up, but you know they're there. And that would take us to the range top, and we'd have to reassess there. But just know that for now, 72, then 73.5, they're kind of the next two targets should price continue to the upside. Now, at the time of filming this, we are halfway through the UK session. So there is another potential thing that could happen if the UK holds the same range as the Asia session. So it doesn't extend any higher than the initial high of the day, which is at currently 71,607, or break below the initial low of the day, which seems unlikely, but you never know. And the initial low of the day is at 69,733. So if UK stays in that range, then it's doing one or two things. Either Asia made the move, which it did because it was a wider than 2% range today. So Asia made the move, UK is going to consolidate, and that means that UK behavior and